All right. It is 12 Central, so we're going to go ahead and get started. Good afternoon, everyone. I'm Melanie Thomas with TMC, and we're so excited to have our preferred partner, Land Gorilla, with us today to discuss driving profitable construction lending growth. I'm joined today by Eli Peltzer from Land Gorilla, Corey Bearden with Luminate Bank, and Nicole Wolfgram from Waterstone Mortgage. Before we get started, I have just a couple of quick housekeeping notes. This webinar is being recorded and all attendees are muted. You will receive a copy of today's recording via email after the session. If you have any questions throughout the webinar, please drop them in the Q&A and we'll make sure our experts here can answer them. And with that, I'm going to go off camera and hand it over to Eli.
Thank you, Melanie. Appreciate everyone joining today, and we're excited for this opportunity to talk a little bit about construction lending. So to kick off today, we want to hear how some leading institutions like Luminate and Waterstone that we have on today are identifying the right products and building the necessary infrastructure to scale their construction portfolios profitably. So let's start with strategy. With today's housing shortage, where are you seeing the most popular lending opportunities in construction right now?
Hey, Eli. Thanks. This is Corey with Luminate Bank. Probably the most durable demand that we're seeing right now is in single-family residence construction to perm one-time close loans is where our biggest demand is at that we're experiencing, and it's especially the demand is in those markets or areas that are lacking in inventory and or affordability is kind of what our experiences are today. We're seeing that a lot of these clients are looking for loan programs that are offering, very competitive rates, a good streamlined closing process, really clear communication and transparency, and affords just a really easy draw process for these opportunities, which, as most of us here know that are doing one-time closes, that those are all benefits of a single close a lot of times.
Great. Thank you, Corey. What are some of the core components of structuring a scalable construction program while successfully minimizing risk and friction?
Yeah, so hi, I'm Nicole Wolfgram from Waterstone, and I'll take that question. So I think there's really like a top four for me. I think number one, I think you need to know your builder. I mean, we understand we're not lending to them, but they're like a vital part of your construction process. They're providing your collateral. You close a loan and rely on them to provide the house, the collateral. So it's important to know who you're doing business with and that they're going to be capable of doing what they say they can do. I also think pricing. How are you setting the rate? When are you locking? Do you have a fixed rate, an adjustable rate? So I think those are all important things to work closely with your capital markets team to make sure you have a strategy in place so that you have a profitable construction product. Docs, I think, is my number three. Having a solid construction loan agreement, I think, is one of the most important documents that you'll have signed on a construction loan. If issues arrive during construction, this is going to be the document that you're going to revert back to on how to handle those issues. You don't want to have to create a way to handle situations as they occur, but rather have an agreement that's agreed upon between you and the customer that you can revert back to as things happen. This protects your rights and dictates how things are going to be handled during the construction phase of your loan. And then I think number four would be having a sound draw process. Make sure that you're protecting your collateral and dispersing funds appropriately, making sure that you have a draw process in place that goes over what's needed to approve and release a draw. You want to make sure you're not over dispersing and you're staying balanced with the funds you needed to complete the home. So I think those would be top four, in my opinion.
That's great. Thank you. I appreciate that. And Corey and Nicole, what role does training play in the program's success, and how do you deliver that to the teams within your organizations?
I think it's pivotal. Right off the bat, I look at training as an opportunity and kind of as a profit center. I'll be real honest with you. When you're looking at having a profitable construction division, it all really, in my opinion, starts with with training and having some form of a tier system that you address at each level that is involved in a construction loan, from loan officer and operations training for your personnel, to borrower orientation and training, so that we can help these borrowers understand the timeliness of the construction loan and what to expect, and then how inspections work, or change orders. Some programs may involve contingency funds or interest reserves, or have some form of extension requirements that might be a part of their transaction. And so, borrower orientation and training right pre-closing is super, super important, and how I feel with that. And then your builders that you're working with, they have to fully understand your draw requirements and lien waiver expectations, and then the technology that you have in front of them that for your borrowers and your builders to help them be successful throughout the construction phase is really a training event as well. So we approach it in a kind of a 3-tier curriculum, kind of like that, starting with our retail loan officers on the front end to operations, and then expand it through the process just to set the expectations is a part of the process that we follow at Luminate as well. Yeah.
Yeah, we have similar processes where we are doing training for, all three parties: loan officers, processors, internally, as well as builders and customers. I always tell our loan officers that are looking into originating this product, don't be scared. It's not going to be as hard as you might think. You don't need to be an expert in it, but it's still important to educate yourself on the product and the processes so that you're setting the correct expectations with builders and borrowers. You don't want to mislead anyone or tarnish your and your company's reputation. That goes without saying with any type of product, whether it's construction or not, right? You need to educate yourself on the products that you have. We offer, recorded webinars that LOs and processors can take, as time permits. We have kind of a construction 101 class that goes over all the needs to knows, from starting to talk to a builder to converting the loan to permanent financing. So all the way through the process. We also have job aids, tutorials that go over the different steps of the process from start to finish. We also have an individual on the sales side that supports our entire sales team with providing education on how to sell the product, how to market to builders. He gets on calls with loan officers that are wanting to get more involved with the product, and he provides his expertise and knowledge, from someone that's in their shoes, as from a loan officer perspective. So I think that's important too.
Thank you, Nicole. That's great. Let's shift a little bit. So you talked about training on the internal side of both of your organizations. Let's talk a little bit more about the builder and borrower piece as well. So construction lending is complex. It's more complex, of course, and success often hinges on managing expectations and communicating effectively with all the different parties that are involved. So back to the borrower piece, Corey, you started talking about this, but what borrower education strategies have been effective for you?
Yeah, and to continue with that really starts with our loan officers on the front end working with their borrowers, and then at our organization we have construction loan specialists that tie in together with each one of our retail loan officers to support them from originating a loan that they may or may not do very often, right? From the least knowledgeable loan officer to the most experienced, so that we can arm them with tools in their toolbox to be able to go out and share the products appropriately, right? And so and that rolls into the training, from a borrower education standpoint. So we kind of front load the education side of this for the borrowers pre-closing, and really just give the borrowers some simple documents that they can reference to, much like Nicole mentioned just a second ago, from quick video-based type trainings on what is a contingency, what is a modification, how does the draw process work, to just a simple frequently asked questions, one-pager roadmap that they can refer back to from the origination all the way through certificate of occupancy when the home is complete, and then really the goal with that is to not overload them with a lot of information, but arm them and educate them so that they can understand walking through the construction process, because this is it's challenging to go build a house, especially if you don't have much background in doing that from a borrower's perspective when you're working with builders that this is what they do every day. So giving those borrowers a lot of education on the front end and then reinforcing it with our people and the right people doing the jobs, from the originators to the construction loan specialists to the draw administrators when we get to post-closing and walking through that process with the customers, has really been effective for our organization. And what that has done is reduced fewer calls, fewer, status on calls, because we've taught them how to use the technology and go online and use their one-site application and track their systems, and fewer disputes or conversations about challenges with borrowers and builders. And really, it just helps and increase our turn times by helping with the education on the front end, which I think is a large part of really construction administration and managing it from beginning to end. So that's been successful for us.
Great. Yeah, thank you. Now, what about the builder side? How are you partnering with builders and managing their expectations?
Yeah, so we start very early in the process with builders and trying to set the proper expectations with them up front and educate them on how we do business. Our LOs are providing information to them right away during our builder acceptance process. So we start early so that we don't waste anyone's time. We don't want to make sure that, we're going to be a good partner for them and they for us. And then during the loan processing, our LOs and our processors are going over our draw process and how they're going to get paid to help eliminate any surprises that could come about and cause issues and delays for us during the draw phase. Our construction team also has a call with the borrower and builder right before closing to provide high-level overview of the project, making sure we have the final figures, making sure we're setting the expectations for the process, again, how it's going to work after closing. And then once the loan closes, builders are getting a welcome packet emailed to them and an introductory call from their draw administrator that they'll be working with throughout the draw process. We try to set everyone up for success so that by the time construction begins, everyone knows what to expect and the process can go smoothly.
Perfect. Thank you, Nicole. That's a great answer. Let's talk about risks a little bit. Risk management obviously is critical to construction lending, and construction and renovation lending does bring that additional element. Where do you see the greatest risks in construction lending, and how are you mitigating those?
This is probably one of the biggest topics about construction administration. I think, there's a lot of lenders out here that are looking to enter into this space or may already be in this space, right? And managing risk is everything that we do at the end of the day. And so I feel that some of the biggest risks that we've personally experienced and we have managed through is going to be the draw administration side of that, and processing the draws, the wires, the lien waivers. Are you using a manual process like an old legacy system that you've built over time? Is it, a system that's easy to use? If you're using a legacy system that somebody has built over time, does anybody else know how to use it if they're not there to be able to use that system? I've seen when we started in the business, we started on an Excel worksheet, and that thing grew to over 300 houses under construction, and it became a monster for us to manage, and so really I think that, draw administration and manual touch poses a lot of risk in some areas. And it creates a lot of challenges for you in the end. It can create some delays. So if you're very manual, you have a lot of manual touch in there, it can create some delays in processing of wires and draws and funding delays, which poses all of its own different challenges when builders aren't able to receive their funds in a timely fashion, pay their subcontractors, pay their material suppliers, and things like that. It creates a lot of frustrations for a process if you're very, very manual touch. And one of the bigger things that a lot of lenders don't take into consideration is the reputational risk that it places upon their own organization, from being very manual process. And it's unintended, errors occur with manual processes, but from our perspective and what we've learned over the years, it's probably one of the largest expenses, unforeseen expense that you may have as a lender, being a very manual operation. And legacy systems are good, and I don't mean to say that they're not good, but there are some really good legacy systems out here that work. But so I think that the manual touch is one of the largest risks from a processing, draw administration and processing perspective. And then to add to that, builder performance at the end of the day. You know, if we can set a builder up to perform and fund them appropriately and walk them through the process and help them be successful, you know, builders will complete their projects on time. They will have the funds to do so, and they will be able to manage that appropriately. But builder performance is a large risk to our industry today. There's a lot of builders out here that are very good at what they do. There's some builders out here that are not good at what they do. And you have to be able to recognize that as an organization if you're managing draw administration and see the signs and hear the discussions and just listen, and it'll tell you a story a lot of times. So manual operations is very big. Builder risk is very big, and starting and finishing projects if they have the right tools to do that and support to do that. And then your market volatility in regards to subcontractors being available, materials being available, permitting, and just different delays that, depending on what area you're building in the country, you may have some different exposures because of that as a lender.
Thank you, Corey. To builders, you know, to what extent are you vetting the builders on your construction projects?
So we have a set builder acceptance process that we go through with each builder that we do business with, so that we can get to a level of comfort knowing that the builder is experienced to complete the build, that they pay their suppliers timely, so that we're not going to see mechanics liens get placed on the property, and that they should be able to get through the draw process adhering to our processes and procedures. I don't think any vetting process is going to be perfect. Just like when you underwrite a borrower's creditworthiness, you will still have unexpected events occur where a borrower defaults. We've had a few builders default over the years, and when we go back and look at our vetting of them to see if there was anything we missed, there wasn't. You know, sometimes things just happen. I'd like to think our vetting process has prevented this from happening more frequently. And I think every lender needs to come up with their own review process to meet their specific risk appetite with the product.
Yeah,
that's great.
To add to Nicole's, what she just shared, you know, we have very much similar processes there. I think one of the biggest things that anybody that may be listening to the call today that's looking to enter into the construction lending space or scale or grow or whatever their goals may be is really just define the kind of construction lender you want to be. And work with that within your risk management right there, you know, because a lot of lenders may lend locally and work with builders just in their areas, and they may have a better concept of how their book of business works and maybe have depository accounts with them and have a very good relationship and things of that nature. And you maybe you're a smaller bank that just lends as a community level with its members in a specific area, or maybe regionally in just a couple of states. Two, maybe you're an IMB that services multiple states and you're going to lend in multiple states, or a depository that works nationally like we do as well. And so vetting the builders and understanding their processes, it's different for every one of them. I'm sure Nicole will agree. They all have different requests and things at the end of the day. But I think for understanding their requirements, having a standardized process in place that your bank or your organization is comfortable with from a vetting perspective. Even the best builders fail in hard times, and the ones that you might think might not perform the best end up being some of your best builders that build 5 or 10 houses a year with you, and you build good relationships. So whatever that looks like, you know, references are always helpful, but social media today tells a big story. People are not afraid to share their opinions about experiences they've had working with builders and contractors. And so we kind of look at a big picture that way. And, you know, depending on the tier level that a builder wants to build with us, and meaning number of units under construction or dollars and volumes, we dig a little deeper the more that we get into that from a financial perspective and things of that nature as well, to kind of understand the builder vetting process on the projects.
Great. I like that. Are there any specific signals that you look for to identify project health red flags before they lead to a major loss event?
A couple that come to mind would be, you know, if a project doesn't have a draw within so many days after closing, that's a concern for us. If there is a significant amount of length of time between draws, that could also be a concern. Now, it could be just that a builder, is able to cash flow that project without needing to draw as frequently as some. But certainly it's something to check into, to ask about, to see how things are going. And then I guess the obvious one would be like if we're seeing mechanics liens being placed on a property, obviously that's a red flag there that bills aren't being paid properly. Those are just a couple big ones that come to mind.
Okay.
Yeah, for us, Eli here at Luminate, we're really relying on technology a lot to help identify potential risks that we see that could be red flags. And we use Land Gorilla technology to help us with that. And to support what Nicole just shared, our administrators are the drivers of that. So we have our in-house administration, and we've taught them to listen. If you listen, they will tell you a story, right? And as much as Nicole just shared, if they're not talking to us in 60 days, well, we're reaching out to say, hey, how's everything going, right? But we can set the technology up to set up reminders for our draw administrators, because when you're managing a large pipeline, to touch every file every single day is a challenge, right? So you have to use the technology to manage the red flags. And we do that by setting up reminders for our draw administrators that say, hey, date of last draw was this day. At 60 days, if we haven't had a draw request, then we send out a simple reminder to them, and we formulate how many of those we need to do that. And we reach out and just check in and make sure things are going well, right? And then we also use the risk ratings out here that Land Gorilla has put in place from the technology software. We can rate the risk based upon the performance of the transaction, and we meet on those weekly for challenge loans to help stay in front of those red flags. And and then using the lien waiver technology that Land Gorilla has built in place, it gives us a notice right off the bat when we're processing draws. We can utilize those systems that are in place to help us make good decisions, right? And so we kind of just use those tools. We preset them. We automate as much of that as we possibly can so that we can scale and grow and use the technology that's out there that Land Gorilla has put together to help us be successful with that. But above all, we teach our draw administrators to listen, because if you start hearing your borrower saying, I haven't heard from my builder, I can't get in touch with my builder, or I've got a builder saying I can't get in touch with a customer, there's usually some story that's going behind that you should probably listen and investigate in our past history and opinions anyways. Yeah.
That makes sense. I love that. Yeah. I'm glad you brought up technology too. That's kind of the final topic that we have here, with a few questions around technology. So manual processes, and you talked about working on Excel, Corey. Manual processes can be the biggest barrier to growth and profit in this space. At which specific touch points is the implementation of technology considered critical for efficiency and compliance?
I think it's very early in the game. I think you got to be very early in the game, and that at the point that you decide what type of lender you prefer to be, community-based, regionally based, nationally based, how do you want to scale? What is your growth? What is your risk appetite? I think early in the game, you have to decide on implementation of technology, right? Most of us started saying, hey, I want to get into construction lending. Let's do this thing, right? And we didn't know a whole lot about it. We just understood there's some programs out here we could go do. They give us the guidelines. We follow the guidelines. We close the loan. That's the easy part, right? And then we defined and built our draw administration behind that, right? I've had the experiences of creating draw administration software in the past, and I can tell you that's challenging to do those things and then maintain it. And so, implementation of technology really starts, I think, when you say, okay, this is who we are, this is the risk base, this is where we want to go and how we want to support your retail loan officers or your builders or whatever your construction lending looks like. Do that early, right? Because if you can do that early, there's a lot of good technology that's in place right now that'll save you a lot of bumps and bruises that you don't want to experience by just learning on accident, right? As I shared earlier, manual processes create errors create cost in dollars, and they create time, and time is of the essence, and time costs money. in today's environment. So I think that implementation early and standardizing what you do, workflows and processes, implementing the right technology, whether you have somebody, whether you're using a system to do all of your construction administration for you, because there's those options with your technology, or you're managing the draw administration yourself and you're just using Lane Gorilla's technology. You have to make those decisions and then, put your workflows in place. But modernize, in my opinion, is the key to success and scalability, right? If you can automate as much as you can and minimize the manual touches, then you will build a system that can actually be profitable, and you won't have what's called that leakage out here. That it's just kind of that unforeseen manual touch errors and things to that nature that we've experienced over time. And it's available today. So for the lender out here that's considering entering into this, they need to experience they need to take a look at the technology that's available to help them be very, very successful. Because when you standardize and you modernize and then you staff the right people to do the jobs for your construction division, it will help you create a profitable division that can run automated. And the goal, in my opinion, is for our draw administrators to be viewing the draw administration process from 10,000 feet in the air, and all they have to do is push the button to authorize, and the system does the rest for us. And it tracks our accounting, and it tracks our lane waivers, and it tracks our draws, and it tracks our balances, and it does all the things for us, and it gives us our risks out here, and it tells us a story every day. And so right off the bat, define who you want to be as a lender, and then define the technology you're going to need to be successful, because legacy systems are okay too if they work for you. It just depends on how you want to integrate those and how many manual touches and processes you want to have. I can tell you that from my experience, the biggest loss of revenue for us is errors and challenges and time constraints from manual processes.
Thanks, Corey. That's great. How has your digital strategy improved your borrower and builder experience?
Yeah, so everything is moving and advancing on the tech side, right? So it definitely helps us and keeps us current and cutting edge by having the access to the Lane Gorilla app for borrowers and builders that gives them 24/7 access to their budget. They can draw requests right out in the field on the touch of a button on their phone. They can sign those draws electronically, sign lien waivers electronically. Everything can be done by just, the touch of a button, and you don't even need to be in front of a computer. There is automation in place that an inspection can get ordered at the time of a draw is requested without any kind of human intervention. Same thing can happen for a title update. All can be automated to happen by the triggering of a draw request. So having that ability to tap into technology certainly can make the process go smoother, easier, and quicker for a borrower and builder, and get funds into the builder's hands as quickly as possible.
Thanks, Nicole. All right, I got one last question, and then I know we have a few from the audience that have been coming through. How have you measured the impact of technology in reducing costs and boosting your department's overall profit margin?
Sure, great question. We measure the units based on the economics of the cost per loan and the transaction ultimately from start to finish at the end of the day. So from origination to modification and or takeout, we built a system that helps us measure certain parameters through that, defining a cost per loan. And it's based on, quality of the loan, right? How well did the process work for us, right? Were there error rates or were there defects involved? And if there were, what were those and what caused those, right? So we look back, we put technology in place to help us automate as much as we possibly can. There will always be some manual touch in almost every transaction from an onboarding perspective, or authorization of pushing a button and saying, yes, okay, send that wire, or things to that nature. But we kind of measure the economics from that standpoint. With us including the technology, and I'm telling a story here, it's reduced our staffing hours per transaction. I don't have to have as many draw administrators as I would require in the past because of manual operations that we had in place. And it's accelerated our process, and it's created an environment that the builders are happy. As Nicole just shared with the app and the online opportunities that they can now just log in, see their budgets, make their request, initiate the inspections, and do all their tracking that way. It's really created a great system, and it's helped us control our cost and boosted the experience. And so there's value in that as well, because now we have referral customers that are going to be coming back because they've appreciated the experience, not only on the borrower side and the builder side, but also of our retail loan officers. They come in and say, okay, this system does work. These are good programs. And they go out and experience and share those programs again. So the impact is large of having the right people in the right seats to manage, and then having the right technology in place, because it can help drive your profitability and really minimize your losses by reducing manual touches and errors at the end of the day.
Thanks, Corey.
Yeah, we've been a utilizer of technology right from the start of our construction business. Like Corey said, many lenders might start out in this business using spreadsheets to track draws and tracking the funds that are in the budget. We moved right from the start with utilizing technology and draw software. We also built automation within our LOS, where we have a process that moves a draw from being approved from our construction department right over to our funding department to get that wire released, and then right over to our servicing department quickly without a lot of manual work. And while there's certainly cost involved with utilizing draw software technology, doing so allows us to operate, I think, with less manpower, which saves us on personnel costs, just like Corey had mentioned. And we're able to get draws processed quickly, efficiently, which helps keep the projects moving along and builders coming back and continuing to do business with us. We've had builders that have told us that they are sending us additional business because they find ease with our draw software and process, and the ability to easily and quickly get a draw done. So I think technology helps us save on costs, and also helps us grow our business.
Great, thank you. All right, we got a couple of questions from the audience here before we wrap up. The first one: how do you deal with cost overruns and borrower and builder discord? That's something that the builder and borrower need to manage, but invariably both builder and borrower want the lender to mitigate. Any thoughts on that one?
We don't really...
I'll go, Nicole. Yeah, you bet. Sure. So cost overruns are tough at the end of the day, because, we hope that the builder has created a budget that is spot on as possible to start and finish this project. For our organization, we work on fixed cost contracts. And so we're doing agency C2P loans, one-time close FHA, conventional loans. And we encourage a contingency reserve account to be built in. We don't require it, but we encourage it. So in those areas where the builder doesn't account for their own contingencies, we encourage the borrower to build in a contingency to manage those potential cost overruns or upgrades or change orders or anything that might happen right at the end of the day, because they do create discontent between the borrowers and the builders. And this goes back to part of that education we talked back at the very beginning of the podcast with the borrowers. Most of these borrowers have never built a home. This is their first home, right? A lot of times, or maybe their second home, but the experience of walking through, picking out everything in the home, because they're typically building a custom home, the paint, the flooring, the drawer pulls, the doors, the knobs, everything, and want to upgrade to certain materials, and countertops is usually the number one thing we see in cabinets, right? So we always revert back. We try to help mitigate any challenges and help the borrower understand the process, but at the end of the day, if there's cost overruns, it's the borrower and builder's responsibility to work it out at the end of the day, because us as a lender, we only have so much money committed to that loan. There's no going back and getting any more, since we've already closed the transaction up front, right? So the borrower in that instance would be responsible for anything that the builder and them don't agree upon, and especially change orders that are not taken care of and paid to the builder up front before the work happens. And so from them not agreeing, we try to help them understand, and if they can't, we follow our residential construction loan agreement to the T. There's a section in there that talks about borrower default, builder default, arbitration. You have to have these things lined out, and you follow that construction loan agreement to the T, because at the end of the day, we're doing construction administration is between that borrower and that builder to get this project finished within the allotted timelines.
Great, thank you. All right, another question that we had was, how do you mitigate those draw time concerns? And I think this was in reference, if I remember when this question came in, to if there's a delay between closing and when the first draw comes in. So how do you mitigate those draw time concerns, again, if there's a gap between closing and the first draw? I think that's the point of the question. If I missed it, I apologize.
Yeah, I mean, there's only so much you can do to get a builder to start construction and to get moving with the project. We try to mitigate some of that up front by making sure that permits are going to be issued very closely to the closing date, so that there's not a lot of delays in getting permits issued that could delay a project. And then, like I think Corey had mentioned, like we have processes in place, triggers that if we go so many days after closing without a draw, that triggers a call to the customer, to the builder to check in and get status. And we have a solid construction loan agreement that if they don't commence and are making progress, there are ramifications for them that are spelled out in our construction loan agreement.
Great. And then last one that I have, could you please share what tech stack are you using to get in front of issues versus manual follow-up? I think we kind of already addressed that one, but anything to add on that question?
Can you repeat the question again? What tech stack?
Yeah, could you please share what tech stack you are using to get in front of issues versus manual follow-up?
Yeah. Well, from our perspective, we're using the Landrilla technology software, right, for construction administration and management, right? We use that wholeheartedly, and we integrated it with our LOS system. We pulled data from Encompass, which is our LOS system, into Landrilla, and we're using that system there to help manage the day in, day out needs of the construction administration, from draw management, wires, funding, risk management, risk ratings, days of last draws, days under construction. We use the whole technology system that's provided through Landrilla to paint the picture for us, and then our draw administrators manage that pipeline based upon that technology that helps us stay in front of potential challenges, and we can point to red flags that we see. And then on top of that, again, I mentioned just listening. A lot of times
Right.
it tells us a story when we talk to the borrowers and the builders if they're having challenges.
Great. Okay, Nicole and Corey, thank you both very much for your time and for going through these questions. Melanie, I will turn it back over to you.
All right, perfect. Thanks, Eli, Corey, Nicole. This was a great discussion and insight. I thought it was really helpful for everybody. I want to thank everyone that joined this afternoon. We hope you enjoyed this TMC Connect Partners webinar, and we hope to see you again soon. Take care, everyone.
Thanks for having us.
Thank you all.
Thank you.
Take care.